Now let us take a practice problem and try to calculate cash flows resulting from the operating activities. You see on your screen a profit and loss account, and we also have a balance sheet to go along with this and some additional information. Using the data from this income statement and balance sheet, we'll try to calculate cash flows resulting from operating activities. We know the format, so what we are going to do is take the data from this income statement and balance sheet and fill into this format and do the calculations. So let's begin with identifying the net profit for the year. The figure of net profit can be found in income statement or balance sheet. So let's go to both these statements one by one and find out this figure. As per the profit and loss account, we have 7,000 in the previous year, earned 4,000 in the current year, and then distributed 1,000, and then we are left with 10,000 in the current year. That means net increase in the profit and loss account during the year is 10,000 minus the 7,000, which is 3,000. Let's go to balance sheet and confirm this. In the balance sheet, you see 7,000 as the balance in 2014, which goes up by 3,000 in 2015, which means the accounting profit during the year is 3,000. The next thing to do is add back any non-cash expenses and non-operating expenses. So let's figure out what are the non-cash and non-operating expenses in the income statement. So we have provision for dividend and transfer to general reserve. Transfer to general reserve is a non-cash item here. Provision for dividend again is a non-cash as well as non-operating. If this was dividend paid, then it would not be non-cash, it would be cash item. However, this is also non-operating item. And then you have provision for tax here, which is non-cash item. You have non-cash expenses given to you in bulk, so you can look at that. And then you've been given non-operating expenses to be 50% of 11,000, which will be 5,500. So we need to add back all these items to the figure of net profit. So let's do this one by one. So for reserve, we have 500. And for dividend, we have another 500. So let me just write it as 1,000 here. So 500 plus 500. Then you have provision for tax made during the year. This is 5,000. Depreciation. We do not have a figure for depreciation, but we have been given the non-cash expenses, which is 8,000. So we are going to call this, let's assume that all the non-cash expenses mean depreciation, so 8,000. And then we do not have any preliminary expenses or any interest paid on loan, but we do have information on non-operating expenses, which are 5,500. So 5,500 being the non-operating expenses, we can assume non-operating expenses. We can assume this to be interest paid on debt or loss on fixed, because all these items are non-operating expenses. So 5,500 here. And then let's just go through the income statement one more time to ensure that all non-cash items and non-operating items have been taken care of. So in indirect expenses, we have included 5,500, 8,000 is done. Provision for tax has been accounted for, and then you have general reserve and dividends. So everything from the income statement has been taken care of in terms of adjusting to the adjustment to the operating to the accounting profit of the business. After this, we need to adjust this figure for any non-operating revenues earned by the business, which may include interest or dividend received or any profit on the sale of fixed asset. So let's go to income statement and identify if there is any item of non-operating revenue. So we see here there is 1000 which is interest on investment, and because this is an investment income, this is not the operating income. So we are going to deduct this amount by writing it here, and I'm putting this in parentheses because this is a negative figure. So we need to do these calculations and figure out the amount, so which comes out to be 18,500. So this gives us 21,500 to be the operating cash profit before working capital changes. Now let us go to the next step and find out what are the working capital changes we need to adjust this figure for. So let us go to the balance sheet and find out what are the changes in current assets and current liabilities that we need to adjust for. So here is the balance sheet, and let us look at the current assets first. So debtors, bills receivables, prepaid expenses, these are the assets, and we ignore cash and bank balance because the purpose of preparation of cash flow statement is to find out what are the reasons for this change in the cash balance. So this will be taken care of at the last part of the cash flow statement. Right now we need to look at all the current assets and current liabilities excluding cash and bank balances. So we see here debtors go down and prepaid expenses go down. So there are two items of current assets which are going down by 2,000 and 500 respectively. So debtors go down by 2,000 and prepaid expenses go down by 500, and then you have bills receivables which go up by 3,000. So increase in current assets, $2,000, correction 3,000, and then now let's look at the current liabilities. We have creditors and outstanding expenses. Creditors increase by 5,000 and outstanding expenses go down by 1,000. So increase in current liabilities. Here creditors go up by 5,000 and outstanding expenses go down by 1,000. Now we need to add these three and deduct these two. So I'll put these last two figures in parentheses, which indicates these are negative figures. So let's check balance sheet one more time to ensure that we have taken care of all the current assets and current liabilities. So debtors, bills receivables, prepaid expenses, and then creditors and outstanding expenses. So we have included all the current assets and current liabilities in the calculations. Now let's do the calculation and find out the net cash generated from operations, which is equal to 3,500, and this gives us the net figure of 25,000, which is the cash generated from operations, and from this figure we need to deduct the income tax amount which has been paid. So let's go to the additional information. Income tax paid is 4,500. So we deduct 4,500 from here, and you have a net profit of 20,500. Now this gives you the cash flows from operating activities of the business.